So what is going on with Bitcoin right now? Are we supposed to be harvesting our gains before a really harsh winter sets in? Or is this just a dip before a brand new spring? The market is sending out some seriously conflicting signals, and today we're going to break them all down using this really powerful seasonal metaphor. So let's check the forecast. And this is the take from Morgan Stanley, one of the biggest players on Wall Street. Their message seems pretty clear. The season's changing, and it might be time to start taking some profits. This simple analogy really frames the entire debate that we're seeing play out. But to get what fall really means here, we first need to understand the cycle. You see, this whole seasons thing isn't just some random metaphor. It's actually based on a historical pattern that a lot of analysts follow pretty closely. The core idea is that Bitcoin's price tends to move in this predictable 4-year rhythm. You get 3 years of growth, think spring, summer, and fall, and that's followed by 1 year of decline. You guessed it, the winter. So the big question on everyone's mind is, which season are we really in right now? Okay, so let's start by looking at the evidence that has a lot of people reaching for their coats. We're going to dive into all the signs that are pointing towards a potential crypto winter. After a pretty big price drop, analysts basically declared that Bitcoin has entered what they call a technical bear market. Now, that's not just a feeling, it's a real designation that gets triggered when some key long-term indicators, like the price falling below its yearly average, start flashing bright red warning signs. And it feels like these negative signals are kind of piling up from all sides. For one, the price has officially dropped below its 365-day moving average, which is a huge deal for judging long-term market direction. At the same time, the market maker Wintermute is pointing out that the usual sources of cash, the liquidity, have kind of stalled out. And, investor behavior is telling a story too. Long-term holders are selling, while anyone who bought recently is now at a loss, which just creates more pressure to sell. And if you want to put a number on that selling pressure, get this. Analysts at Bitfinex are reporting that long-term holders are offloading about 104,000 Bitcoin per month. That's the highest rate we've seen since last July, and historically, bull markets don't usually get going again until this group starts buying, not selling. But hold on, not everyone is convinced that winter is just around the corner. Let's flip to the other side of the argument and see how this very same situation could be seen not as a threat, but as a massive opportunity.
Okay, this chart from Santiment is pretty much the cornerstone of the bullish argument. Just look at how things have diverged over the last 3 months. While your traditional assets like gold and the S&P 500 have been climbing up, Bitcoin has gone in the complete opposite direction. And that's pretty unusual.
So the really crucial point here is this. For years, Bitcoin has been pretty tightly correlated with stocks. That link has now apparently broken. And for the bulls, this isn't a sign of weakness at all. No, it's a sign that Bitcoin is, in their words, arguably being undervalued compared to where it should be based on all those historical trends. And there's even some on-chain data to back this idea up. There's this metric called net unrealized profit, which basically just measures how much of the market is in the money, and it just dipped below the 0.5 level. If you look back, historically, that's been a pretty good signal that the worst of the selling is over and the market might be close to finding its bottom. And this really just captures the two sides of the coin perfectly. The whole market is laser focused on this critical $94,000 to $95,000 price range. For the bears, if we hit that level, it would trigger absolute panic selling. But for the bulls, they see that exact same panic as the classic moment to buy, when everyone else is fearful. It's two completely different ways of looking at the exact same event. All right, let's zoom out from the daily price charts for a second and look at a slower but maybe even more powerful trend that's been happening in the background. And that's the quiet arrival of big-time institutional money. According to Morgan Stanley, these large institutions now see Bitcoin as a legitimate part of a portfolio. They often talk about it as digital gold. And these new ETFs make it way easier for them to get involved. But, and this is a really key point, they move slowly. Their big investment decisions have to go through all these risk committees and internal processes. It's not a quick thing. And that raises a whole new question. Could this slow, steady flow of capital actually change that old volatile 4-year cycle for good? So while the whole process is slow and the market might feel bearish right now, we really shouldn't mistake that caution for a lack of interest. The institutional plumbing is now built, the capital has started its journey, and trust me, it is flowing in a major way. The scale of this is just staggering. According to data from SoSoValue, U.S. spot Bitcoin ETFs are now holding over $137 billion in assets. This isn't just speculative retail money. This is serious long-term capital from some of the biggest players in the world. And this trend is expanding beyond just Bitcoin. The spot Ether ETFs, they've already pulled in more than $22 billion. This just goes to show you that there's a broadening institutional interest in the whole digital asset space, no matter what the short-term market swings look like. So we've seen the bear case, we've seen the bull case, and we've got this massive institutional undercurrent. It all brings us right back to our central question, and that whole seasonal metaphor. And here we are, right back where we started with Morgan Stanley. Even they admit that the timing is totally uncertain. Everyone seems to agree that it feels like fall, a time of transition. The critical question just remains, what's next? Ultimately, the data is telling two completely compelling but opposite stories. Is this harvest time before a long, cold winter? Or is this just a temporary chill before a really powerful new spring, one that's fueled by broken correlations and a totally new class of investor? Maybe the biggest question of all is whether this new institutional money is going to change the climate permanently, making the seasons ahead look nothing like the ones that came before.
Thanks for watching. Before your Wi-Fi drops, hit that like, share, and subscribe button. Stay sharp, stay curious, and keep guarding the trends.